Do you ever feel like your bookkeeping is so far behind that you already know you're not catching up this year? Not, I'll get to it later. Not next month. You know it's already too late. And that stress doesn't just stay in your books. It shows up in how you deal with your clients, how patient you are with your employees, and how much of your business follows you home. So here's the real question. What if you didn't have to fix your current books yet to win the coming year? What if you could start fresh in a way that's commonly accepted and CPA coordinated without waiting for perfection? Gotta love the legal team, guys. In this video, I'm going to show you the exact system I've used with dozens of contractors in your exact situation to open a clean set of books, stay compliant, and finally see where your profits, expenses, and cash actually stand, so you're able to run your business without constantly hovering over it. And if you stay to the end, I'll give you a few tips to determine whether you're too late or not. I'm Joe with Best Decision Bookkeeping, the blue-collar bookkeeper. I help contractors and other service-based businesses stop using bookkeeping as a tax chore and start using it as a decision-making tool. And if your books feel heavy instead of helpful, this video is for you. Let's clear up the biggest lie first. You do not need past perfect books to start fresh. From a tax standpoint, what ultimately matters is that each year accurately reports your income and expenses. That's it. You are generally allowed to open a brand new bookkeeping file for the new year while still working on the last year's books in parallel, as long as you don't delete, reset, or rewrite history. Think of it like a job site. You can start framing the next house while inspections finish on the previous one. You don't have to stop moving forward just because all the paperwork isn't done yet. Now here's the 5-step process to do this the right way. Step 1, preserve last year's file and keep cleaning it up. Do not delete transactions, do not reset the books, do not start over. That file is your official record for taxes, loans, and audits. You'll continue working on last year's books all the way until the tax return is filed. Here's what you'll do early in that process. Save a snapshot of the year-end reports, profit and loss, balance sheet, and trial balance through December 31st or the end of your fiscal year. Export or back up your QuickBooks or other bookkeeping software data so you have a copy, regardless of subscriptions or accountants. That snapshot is your safety net. It's not the finish line. You're going to keep categorizing, reconciling, and cleaning up last year's file until it's ready to file your taxes. That means you're going to continue categorizing transactions, reconciling accounts, and fixing errors in that file, but you're not going to add any new year activity. Here's the part that should take the pressure off. You have until you file your tax return to finish last year. Not January, not February, tax filing. That means that your carryover journal entries are important, but they are not urgent at the start of the year. And this is where most business owners freeze. They wait for done before moving forward, and that's the mistake. You don't choose between fixing last year and starting fresh, you do both. You run your business in the new year file starting January 1 or the beginning of your fiscal year, while last year gets cleaned up properly in the background. And once your CPA finalizes it, you bring the final entries over. Your profit and loss will be accurate from day one in the new file, and the balance sheet will get finalized once the CPA entries come over. Now, I gotta say, this is for educational guidance. Always confirm your specifics with your CPA based on your situation. In step 2, we're gonna open a brand new file for the new year. New QuickBooks file, business name, new year. You'll start with 0 income and 0 expenses. This file is not for taxes yet. It's for running your business intelligently in the new year. The old file equals compliance. The new file equals clarity. That separation is commonly used, compliant when coordinated with your CPA, and professional. And if you're worried about cost, most people keep the old file active just long enough for cleanup and tax prep, then downgrade or cancel once it's finalized. Now in step 3, you're going to have your CPA carry balances forward. When your CPA finishes last year and prepares the tax return, they'll provide you the official year-end journal entries for cash balances, loans and credit cards, assets, and owner's equity. You'll enter those exactly as provided, or better yet, ask them to do it for you. No guessing, no rounding, no improvising. One bad entry can poison your balance sheet for the entire year. Now, this step isn't exciting, but it is critical. Step 4, it's time to fix the chart of accounts so that it actually tells you the truth about your business. Many contractors have charts that are too simple. One line for materials and one line for labor. That's not insight, that's slush. You need categories that match how your work actually happens. Labor, subs, material, equipment, fuel, permits, overhead, and job phases when appropriate. The list goes on. If your reports don't immediately answer where did the money go or what made me the most money, the setup is wrong. I've linked my contractor chart of accounts template and full QuickBooks setup walkthrough below so you don't have to guess. Now, step 5, this is where change actually happens. Starting fresh does not magically fix your business, but it gives you a clean line in the sand and a chance to stop playing catch up and start leading with intention. I understand it's hard, but here's the rhythm you must get into. Weekly, you got to categorize the transactions, match your receipts, and post your job costs. Every month, you need to reconcile your accounts, review your profit and loss, and compare job estimates. And then quarterly, you want to sanity check everything with your CPA or bookkeeper. That cadence turns bookkeeping from stress into power. Now, I promised you at the start that I'd let you know whether you were too late. Theoretically, you could start a new file at any point in the year, but that decision should always be made with CPA input based on your transactions and your reporting needs. In practice, many business owners choose to reset early in the year when transaction volume is still manageable, many times in Q1. Whether that timing makes sense depends on your volume, your systems, and your CPA's guidance. In many cases, what this involves is connecting your bank feeds and going back to the start of the fiscal year, often January 1, and adding a few small other catch-up items. If you want help implementing this, I've built a free FreshBooks Kickstart checklist that walks you through every step we just covered in order. You'll also get my contractor chart of accounts template so you can set this up correctly from day one. Both are free, grab them down in the description. And if you want this handled for you, use promo code FRESHBOOKS before March 1st when you set up a call to save 15% on setup. Starting fresh isn't about erasing the past. It's about finally running your business with clarity. Clean books, current numbers, better decisions. Download the checklist and tell me in the comments what's the one bookkeeping issue you're sick of dealing with. Then watch the next video where I show you exactly how to set up QuickBooks for contractors the right way. That's how you start clean without waiting on perfect.